Hello and welcome from Trend Signal. This is our review of the events and data coming out this week, the week beginning the 11th of May. Last week was a fairly turbulent week, certainly was in the bond markets and in the sterling markets on Friday, following the shock UK election result. On the week, equity markets had a fairly positive move thanks to Friday's exceptional move, certainly in the US markets where the Dow posted a significant gain. S&P's not quite as much, but certainly ended up positive on the week following a tough start and some fairly poor data midweek, certainly in the US. The DAX benefited from what looks like certainly a tailing off in the profit taking in the dollar, so the euro started to give back some of its gains, which certainly helped propel the DAX 270 odd points on the week, which is about 2.5%. Bond markets continued their fall, although it looked like the worst was over come Friday. The Bund, the German sovereign bond, that was down 238 points on the week. The gilt reacted a lot more positively, mainly because of the UK election result on Friday, just down 82 points on the week following a sharp sort of knee-jerk reaction on Friday following the result. Conservatives won an outright majority, 231 seats, giving the Tories a working majority, I think of about 12 seats. Three party leaders have resigned in the aftermath, so all fairly dramatic stuff. Sterling up 300 points. The FTSE, as I said, rallied. In fact, on the day on Friday, it rallied 160 points. Banks, house builders, property companies, utilities all made significant advances. Last week, non-farm payroll came in okay, matched consensus, but the previous numbers were revised down from already weak 126,000, so revised to 85,000. But the market reaction suggested relief that the labour market had certainly bounced back, but not too much so that it could hurry the Fed to raise rates in June, hence the very positive reaction, certainly in US equities. Overnight news on Monday morning that we are confronted with, not just the Greek news, but the Chinese rate cut. They've cut interest rates again by a quarter of 1% to 5.1%, which is the third cut in 6 months, and it's an attempt to counter the slowdown in the economy. Overnight reaction fairly positive for Far East markets, with the Shenzhen, Shanghai markets, the Nikkei and the Hang Seng all positive, but I think Western markets have got other issues on their minds, most notably Greece, which is something that I will focus on now. It's a headline on the FT's market section. Greek Eurogroup talks dominate week ahead. Euro area finance ministers, they're going to meet in Brussels today, with Greece dominating proceedings. Just to sum it up, really, Athens owes the IMF 750 million, which is due tomorrow. This is part of the repayment plan set 5 years ago as part of this bailout that they got in 2010. And the IMF is absolutely unyielding in its demand to have this money repaid, and it gets worse in June, when Greece owes another 1.5 billion to the IMF, and also it has the same sum but in 4 payments in September, and it also owes 3 billion to the European Central Bank in July and August. So not looking particularly positive. To get out of this, Greece has to agree to a series of measures to improve its financial position, its fiscal position. The problem is that the terms of any agreement, I would assume, will be totally contrary to Syriza's election manifesto. So any result or any agreement could result in a revolt by the very people that voted Syriza in. And we've already seen pictures of Syriza activists marching in Athens, ensuring that the government understand what they want. Tsipras, the Greek Prime Minister, has stated that he would call a referendum over the terms of any agreement should that be reached, which would effectively be a referendum asking the Greek population if they wanted to stay in the euro. The odds are pretty much stacked against Greece remaining in the eurozone when one looks at those facts. Other key data out this week, we've got the MPC, the UK rate setting committee. This has been delayed from last week, obviously, with the election. That was not allowed to take place on the day of the election. due to election rules. We're not expecting any change. As always, the MP statement at midday on Monday will be closely watched for any signs of anything. But we're more likely to get feedback, some useful feedback on the quarterly inflation report by the Bank of England on Wednesday at 10:30, where Mark Carney may have to take into account of the Conservative election victory and adjust some of his targets and outlook. I think the Conservatives' their move to try and cut the deficit, probably with added vigour following the election, may encourage the markets to price in lower rates for longer. I'm sure Mark Carney will have something to say about that. He has a bit of a habit of surprising the markets, so my advice is probably to expect the unexpected 10:30 on Wednesday. Other bits of data out, as I say, we have the German GDP, the prelim reading. That'll be quite interesting to see how that goes. Plus 0.5%, better than the UK, so a recovery in the Eurozone and certainly in the Eurozone's largest economy, benefiting from the weaker euro over the last 3 months. So plus 0.5% are expectations there. We also have retail sales on Wednesday, probably the most important reading out in the US. The core numbers, what we focus on, in fact, core retail sales plus 0.4% are the expectation, same as the previous month. We then have PPI on Thursday, which is the cost of goods and services going into production, obviously a leading indicator of inflation, plus 0.1%. There is absolutely no signs of any price pressures whatsoever there, so that'll have largely no effect, shouldn't have any effect, depending. We then have our final bit of data on the week on Friday, which is the preliminary reading of the University of Michigan consumer sentiment, and the consumer in the US, despite the rally in oil, still remains very, very positive. 96.5% is the consensus forecast there, up from 95.9. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.